Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and help you to navigate the tax system as it applies to you. So, today we're going to talk about inheritance tax and what this is. Before I do, if I could please ask if you're new here, please do take a moment to subscribe to our channel. That way, you'll easily be able to refer back to this information if you should need to, as well as being able to navigate to a whole host of other topics, all aimed at helping you to understand the tax system as it relates to you. So back then to inheritance tax. Inheritance tax is incredibly complex. So the idea today is just to give an overview, an understanding of what inheritance tax is, and so you can know whether it's something that may be relevant to you. Basically, inheritance tax is, as the name suggests, is a tax on what's inherited. So let's look at it from the deceased person's perspective. So when we die, all of our assets, everything that we own, so we tend to think of assets of big things, but every single thing that we own, down to our clothing, is an asset. Every tangible thing is an asset. So our assets are all valued to form what's known as our estate. So everything is worked out what the value is, and that is known as the value of the estate. Now, the first thing to mention that does cause a lot of confusion is that normally, if you're passing an estate between spouses, there wouldn't ordinarily be any inheritance tax due. So if you die and your spouse receives everything, then that would normally be outside the scope of inheritance tax. But what I would caveat that with is, if you have any concerns about your own situation, then you should seek specific advice. And as always, if you are going to seek advice, make sure that the person that you engage to give you that advice is fully qualified. They hold professional indemnity insurance, and that they are a member of a professional body if applicable. So just to make sure that you get the proper advice. Aside from passing to a spouse, let's say that a single person dies. Let's use that as an example, just because what we're aiming to do today is just show the mechanics of how inheritance tax works. So we want to really sort of look at the most simple scenario to illustrate that. So if a single person dies, then all of their assets would be valued. So that will form the value of their estate. Now, of course, we won't get into as well who does that, because if somebody has left a will, then obviously that's more straightforward. If they haven't left a will, then known as dying intestate without a will. But for the purposes of inheritance tax, the estate is valued. Now, there's generally a threshold that currently at this point in time is £325,000. If the value of the estate is underneath that threshold, then again, ordinarily there would be no inheritance tax due. But if the value of the estate is over the threshold, then this is where inheritance tax would be due. So let's continue with the example of the single person who has died. So let's say, for example, that they've died and they owned a property that was £450,000, and then they've got other assets of £50,000. So the value of their estate is £500,000. So simply to work out the inheritance tax, we would take off the threshold, the £325,000, and that leaves £175,000 that's subject to inheritance tax. Now, currently the rate for inheritance tax is 40%. So that would leave an inheritance tax bill on that estate of £70,000. So if you remember, I worked out the estate as 450 of property and 50 of other assets. Let's say, for example, that they were savings and sort of small assets to be sold. So clearly, if the person who inherited that property, if it's not sort of split, wanted to carry on living in that property and actually, sort of move into the property or start living in it, should I say, then the £50,000 could clear some of the inheritance tax, but there would still be £20,000 that would be left to pay. That would either if the person wanted to keep the house, then they would need to find some other means to pay that 20,000, or the house would need to be sold. So this is the important thing to remember, that it's just simply calculated on the value of the estate, and so some assets may be that the person who's died has, say for example, they may have left something valuable to somebody specific for that person to have. So of course, if the whole estate sold, then simply the inheritance tax is paid out of the proceeds of those of that sale. So, for example, let's go back to the scenario of the single person, £450,000 house and £50,000 in more what we would call liquid assets. So if nobody was actually going to have the house, then the whole estate would be sold, and then that £500,000 would then pay the 70,000 inheritance tax, and that would leave 430,000 to be distributed either per the will or per the rules of intestate. So that's quite straightforward, but you can see how if the house or the property had been left to a person with the intention of them actually keeping the property, this is where the inheritance tax actually paying it can actually prevent somebody from being able to retain an asset. So the liability for the inheritance tax falls on the estate. So obviously the person who's died, their estate is liable for paying the inheritance tax. So the person who's inheriting doesn't pay the inheritance tax, unless in that scenario, of course, that they wanted to retain an asset and they didn't want to sell the asset, then that may require them to have to put some to put something towards being able to pay, but it still would need to be paid by the estate, if that makes sense. So of course, once you've inherited or received an inheritance, then that would form part of your own assets, and then also subject to assessment for inheritance tax if you then die. So if you were the person in that example we used with the £450,000 property, and you were able to sort of cover the inheritance tax, so enable you to be able to keep that property, but then you die, then that asset then forms part of your estate, and that will then be subject to inheritance tax as well. So the talking about inheritance tax planning means actually understanding your own assets, your own estate, your own personal situation, and having a good understanding of what is going to happen to your estate when you die. How much inheritance tax is going to be due, and inheritance tax planning is all about legally um, sort of circumventing some of that liability. So I would always advise that if you want to do that, if you think that that is relevant to you, that you should speak to a specialist inheritance tax um, advisor to get the best advice for you. Certainly, it's way beyond the remit of this channel. But for example, there's lots of sort of pitfalls if people sort of try to think that they understand inheritance tax and understand how that they can plan to make sure that the most of their estate is left to the people that they want it to be. For example, they may sort of gift property or assets before that they die, and there's rules with how long you have to stay alive after that. For that, it could also be that by doing that, they inadvertently trigger a capital gains liability. So it really, really is incredibly complex. So if you think that your estate is such that it would fall within the realms of inheritance tax, and you want to sort of try and look at ways that that can be mitigated, then you should, as I say, seek the services out of a qualified inheritance tax planner, somebody that's specialised specifically in inheritance tax. They will have an in-depth understanding. You will be able to explain your scenario. They will ask questions to make sure they have the full understanding, and they will be able to make sure that your estate can be can be effectively planned for inheritance tax. So that's not to say that to avoid tax, which of course is illegal. It's about planning to make sure that the tax is efficient, your estate is as efficient tax wise for inheritance tax purposes as possible. And I would just stress again, if you are going to take advice from somebody or engage them to help you in this, please make sure that you use somebody that is qualified, a member of a professional body if appropriate, and that they have insurance. So the important thing to remember is with inheritance tax, if you go to somebody and you take advice, it may be that you may have died by the time it comes to light that the advice was poor. So it really is important to make sure that you get the best advice on this. As we can see, inheritance tax at 40%, it's soon, once an estate's over that threshold, it soon it soon equates to quite significant amounts. And so it is worth that investment in ensuring that you have planned to make sure that what happens to your estate is what you want to happen, and that your beneficiaries aren't struggling with inheritance tax and aren't able to keep assets that you wanted them to be able to, for example. So, as I mentioned, this was only intended to be a brief overview of inheritance tax. So we're not going to go into the sort of the really sort of like dig in. There are exemptions to things. There are certain rules that apply to certain assets, a whole set of rules that apply to business assets. So therefore, I would urge you to ensure that you understand your own estate and how that will be dealt with in the event that you die. Thank you very much for watching. And as I mentioned earlier, if you haven't already, then please do take a moment to subscribe to the channel. Thank you. Goodbye.